Hey everybody, it's Miss Morgan, and we're going to talk about some accounting terminology. So let's get started. The first thing we'll need to do is actually talk about what accounting is. And so, got my notes here. Accounting is a system that is going to record the economic activities of your business. That means it's going to record the ins and outs of the business. Let me move this down so you can see it. The ins and out of your business, okay? You think about money. Money's coming in, you buy supplies, you buy products, and then you sell those products so you have money going out. You may borrow money. You've got to keep up with that. It's a system to keep up with everything that goes on in your business. Accounting also is a system that reports the financial condition of your company. So accountants not only record those economic activities, but they also create reports that show people the financial condition of your company. So even if you're not an accounting major, even if you're never going to create those journal entries and record those transactions that happen, you need to be able to understand those reports, those financial statements that accountants are going to create. You need to be able to analyze that, understand that, and also communicate your findings with other people in the business world. So it's very important that you understand the terminology. That is why accounting is called the language of business. So when you first start to learn accounting, you want to think of it as a foreign language. You've got to learn the terminology first, then you understand how the reports are created so that you can understand those. So let's talk for just a minute about a business. Now, a business is going to either offer a service or a product. Okay? And consumers are going to go to that business to buy things, or they're going to call you to have a service done, like a tax service or a loan service. Now, businesses are going to need resources in order to get started with their business. So I want you to think for just a minute about a lawn care company. A lawn care company, if you wanted to start that, you would need a truck, a trailer, you would need a mower, you would need other equipment like a weed eater, things like that. And you would also need cash to buy gas for those things, right? These are all called assets. Assets are resources that your company owns that are going to help you make money. Okay, so assets are things that you own. Well, when you want to start a business, where do you get those assets? Two different ways you're going to get assets. One is money from the owner. You're going to save money and you're going to invest that in your business. Money from the owner is called equity. And I'm running out of room here. Money from the owner is called equity. Another way to get cash to buy those assets is money from the bank. Money from the bank is called debt, D-E-B-T. The B is silent. And in accounting, that is called a liability. And that means you owe somebody money and you have to pay it back. Equity is when the owner makes investments in the company. That's the owner's ownership in the company. And liabilities are when you owe money. We'll talk more about these in the next video.